How one company almost collapsed because three departments all said, "That's not our problem." Three executives walked into a boardroom: a sales VP, a purchasing manager, and an HR director. Each one had just made a major decision for their company. Each one was proud of it, and together, without realizing it, they had quietly pushed their $12 million company to the edge of collapse. Stay till the end. There's one rule hidden in this story that most managers only discover after it's already too late. Hartwell Industrial Supply was a mid-sized company based in Charlotte, North Carolina. They manufactured and distributed specialty hardware components to construction companies across the Southeast. Solid business, loyal clients. 12 years in operation. The CEO, Patricia Hartwell, had built it from scratch. She was tough, visionary, and trusted her department heads completely. She had three of them: Derek, VP of Sales, aggressive, charming, always chasing the next big deal; Sandra, Purchasing Manager, detail-oriented, relationship-driven, always optimizing supply; Kevin, HR Director, people first, process-minded, always focused on team growth. Three smart, experienced professionals. It started with Derek. He was in the field closing a deal with a major construction firm in Atlanta, a $900,000 contract. Huge win, career-defining. But the client pushed back on the price. They wanted a 22% discount and net 120 payment terms, meaning they'd pay 4 months after delivery. Derek ran the numbers in his head. Revenue looked great. The commission looked great. He said yes. What Derek didn't think about was this: Hartwell would spend money building and shipping that order immediately, but the cash wouldn't arrive for 4 months. That gap? That's a financial decision disguised as a sales decision. Meanwhile, Sandra got word that a key raw material, steel fasteners, was available at a rare bulk discount from their supplier, 18% below market price, but only if they ordered a 6-month supply up front. Sandra jumped on it. Smart purchasing. She locked in the deal. $340,000 paid immediately. What Sandra didn't model out was whether the company had $340,000 available in liquid cash right now, especially while waiting on several outstanding client payments. That's a financial decision disguised as a purchasing decision. And Kevin? Kevin had just finished a workforce study recommending Hartwell hire 8 new field technicians to support the Atlanta contract and 2 other upcoming bids. Competitive salaries, sign-on bonuses, benefits packages, total added payroll cost, $67,000 per month starting immediately. Kevin submitted the plan. Patricia approved it on the strength of the pipeline. That's a financial decision disguised as an HR decision. None of the decisions were wrong on their own. The Atlanta contract was real. The bulk discount made sense. The hiring need was valid. But no one, not Derek, Sandra, or Kevin, looked at all three together through a financial lens. The cash flow told the real story. Cash going out, $340,000 in inventory, $67,000 in new payroll, upfront production costs. Cash coming in, delayed. The Atlanta payment was 4 months away. Other clients were already late. For the first time in 12 years, the company couldn't cover expenses without using its credit line. Then the credit line maxed out, and the bank called. Patricia called an emergency meeting. She placed the cash flow report on the table, something she realized should have been shared with everyone earlier. Derek said, "I was focused on winning the deal, not the payment delay." Sandra said, "I thought I was saving money. I didn't check the cash." Kevin said, "The hiring made sense. I didn't connect it to cash flow." Patricia paused, then said, "Every one of you made a financial decision. You just didn't know it." Here's the truth most business schools never teach clearly enough. Finance doesn't live in the finance department. It lives in every decision made anywhere in the company. When a salesperson agrees to payment terms, that's a cash flow decision. When a purchasing manager buys in bulk, that's a liquidity decision. When HR sets headcount and compensation, that's a cost structure decision. The finance department records these decisions. But the decisions themselves? They happen in sales calls, supplier meetings, and hiring interviews. The myth that only finance people need to understand finance is exactly what creates the kind of crisis Hartwell nearly fell into. Patricia restructured her entire leadership model after that Wednesday meeting. Every department head went through financial literacy training, not to become accountants, but to understand one thing. What is the impact of this decision on our cash flow and our bottom line? Hartwell recovered. The Atlanta contract eventually paid off. The bulk inventory saved them money long term. The new hires fueled real growth. But it almost went the other way, not because of bad strategy, but because of organizational blind spots that came from treating finance as someone else's department. Key lessons. 1. Every business decision is a financial decision. Sales terms, purchase volumes, hiring plans, all of it moves money. Pretending otherwise is how companies quietly walk into crisis. 2. The finance department records. Everyone else decides. More financial impact is created outside the finance department than inside it. That's not an opinion. It's how organizations actually work. 3. Cash flow is not an accounting concept. It's a survival concept. Revenue looks great on paper, but if the cash isn't in your account when bills are due, paper doesn't pay anyone. 4. Smart decisions made in isolation can create a crisis together. Each decision at Hartwell was defensible. Together, they were dangerous. Context matters. Coordination matters. 5. Financial literacy is not just for finance people. It's for anyone whose decisions touch money, which is everyone who works in a business. If you enjoy stories about how businesses really work, the decisions, the blind spots, and the lessons people learn the hard way, this channel is built for that kind of thinking. Subscribe if that's you.